Welcome back to the channel. We're going over the price action indicator number 2. Now, when you're looking at price action, a lot of people are going to tell you you don't need indicators, but these are going to help you get your feet wet into the beginner's guide of price action. This is the second video in the installment. More will be coming, getting you ready to trade. Every time I'm updating another video into this, it's going to get you to that next step of trading and create better opportunities. After each one of these videos, you will be able to use these in your trading literally as you finish watching the video. Now let's get right to it. What we're going to be looking at is the 8 EMA. Now, again, just stay with me. It's going to help you with short-term confirmation because you're a scalping and a day trader. This is going to help with your entries and your exits, which are always in demand, and sometimes you're not hitting those key levels. And then number 3, continuation, which is the most crucial part, in my opinion, of trading and making sure you're getting your best exits at all times. Now, these are going to be your major notes to take right now. We're looking at 2 time frames for day trading. The focus will be the 3 and the 5 minute heavily. The 3 will give us the alert to tell us this is when we need to start looking at this. This is coming on our radar. We need to be checking out this stock, currency, crypto, whatever it may be. The 5 minute is where you're making your entries, and that's going to give you your actual confirmation. The keynotes we need to look at as well are going to be once a trend is either bottoming or topping off. You're not looking for flat trading stocks, currencies, cryptos, whatever it may be. You do not want a flat mover. It's not going to help you here. You're looking for something that's having a decent size volatility to the up or to the downside. Now, you also are going to want to make sure you're getting at least 1 candle mounting on the 8 EMA. We want to aim for 2, but 1 will kind of be pushing it. With the right circumstances, we'll give you that level for entry and that confirmation. We're going to get more to that here in a second. This is all on the 5 minute. Again, the 3 minute cross or mount will be the indicator to start looking out for the 5 minute. Now, before I show you exactly the use case in what you're doing, I want to give you a prime example of what you're looking for. So, for instance, SPY is getting great movement. You are moving clearly to the downside with some resistance, and as you can see here, you are holding below that 8 EMA. And what do I mean? So right here, you are firmly above it, and then as you can see, you break here, you hold below it here. That's your second candle, and from here on out, you stay below that 8 EMA the whole entire time till you reach that downside level right there. Now, again, this is a zoomed in chart, so it's going to look like better movement, but it's going to show you what's happening. Now, where are you looking to start entering for calls or trades to the upside? Now, right here, you're going to start seeing that you're getting and breaking back above that 8 EMA, and you're starting to mount that level right here. This is your second candle. So as you break above, these dips and these touches of that 8 EMA will be a clear buying opportunity. Now, this is not going to be the highest percent winning type of trade. I'm going to combine it in a second to show you what you're looking for. But again, this is going to show you exactly what you want. So even though you are breaking down here, you can see you never hold below and you stay mounted above. So you can see these candles never hold all the way below that level. You hold it right here for 1 candle, but the next candle mounts it right back. So this leaves you still in a bullish continuation zone. Now, if you're not seeing exactly what I'm saying, you can even come back a little bit further from the beginning of the day. Now, at the end of yesterday, this is this week's trading level. You can see you started to mount it, and then it was a firm, strong buy at the end of the day. Now, a lot of people don't like to hold their calls overnight, which is completely understandable. But as you opened up today, you gapped up, you came over, and you started getting close to 8 EMA. And guess what? It was a buy, and you started riding that trend all the way back up until you lost it, which was really right here at 449. And you would have got in roughly, if you got in right here at those lows, 446, maybe the highs of 447, a $2 write-up on the SPY, which can make you, again, a pretty penny. So that's overall what you're doing, and this is going to show you the key trend, and you can backlog this, check it out for yourself. It's going to show you the trend almost every single time. You see how you're just finding the trend? Now, what I was talking about in the notes from earlier, you want things that are moving up and down. You don't really want to trade the sideways movement. So as you see right here, you start trading sideways, you're not really staying below for 2 candles. Then you start getting that volatility to the downside. Once you retest it right there, boom, straight shot down. Now let's get into the prime examples and money making opportunities. All right, so what we're going to do is we're going to jump right into the beginning of this trading week, which is right here. This marks the right of the beginning of the trading week. I'll just have it marked out right here so you can see. and it's going to be right when we started trading on Monday morning. Now, the weekly, again, if you haven't watched the last video, you need to go watch it because it's going to set the entire basis of your trading using this price action strategy until you get good at finding those zones for yourself. Now, once you get in here, you can see you start bouncing up, coming back down, and you don't really love the movement because we mentioned before, you like to always play the retest of key zones. You don't want to play the immediate break up. That's not a high quality trade. You always want to play the retest, right? So what's going on here? Where's the place? Now I'm going to have a few trades that are going to be marked out with just a circle, and then I'm going to have a few trades that are with the circle and they say a sure shot, which aren't 100% plays, but they're going to give you the highest percent win rate. These are going to be very great opportunities, the highest potential you're going to have, and these are the ones that are prime for entries. So let's get into it. So again, as you see, you're creating that trend, you're moving to the upside, and then you start breaking down. Now, as you're moving on the ADMA, this yellow line, you break below it, and you get a huge candle to the downside. Now, for me personally, I don't like to just jump in on that candle. What I'm looking for is a retest of that 8 EMA. So what you're getting is that push down, holding still below the 8 EMA, so you are bearish. Now you're pushing back up and you get a touch of what is that level, the weekly, a retest, 1, 2. So you had 2 opportunities to get in around 444.35. Now, if we use our tool right here just to show you the level of opportunity to make money there, you had a tight stop at around 0.10%. We'll keep it pretty tight to about right there, all the way to those lows, and you can even double bottom in that zone. You're making about a 3.4% profit. That's just there. That's without options. Again, if you're trading options on SPY, you understand what you can be making on this. If you're trading leverage on Forex, you know what you can be making with this. That's the potential on these trades. And you can see as well, your risk to reward rate is a 3.43, which basically means it's a 3-to-1 type of win opportunity. These are the trades you're looking for. This is what you want. And you're gonna see as we get into these, the risk to reward will never be below about 1.5, which is always what you want, creating the best opportunities, specifically with how tight you can have your stops on this as well. Now, the second level is something I wanna mention, going again into the ADMA. So what I said, you can look for a 1 candle hold above, but 2's always your best bet. It just always is going to be, the more confirmation you can get, the better. So as you break above and hold here, theoretically, yes, you're looking good going into that candle. You can eyeball it down to the 3-minute, but overall, it looks good. Now, as you can see here, you start to hold that level, and then as you're grinding on that AEMA, that is your entry opportunity. Let's say you enter at the highest level at about 443.66. Again, grabbing our tool for the long side. You're gonna have the same type of stop, about a 0.10 will come down. You can also see and monitor this as well right there, 0.10%, all the way to those local highs you have at the top right there. We'll go a little bit lower because you had a few double tops here. You can see once again, your risk to reward rate is a 4.42, having even more opportunity for profits. Now again here, this is a riskier opportunity. It's not one of those sure shots. What do I mean by the sure shot? What are we looking at? So as you start to trend up, if you didn't buy in right there and you wanted to get confirmation, because that weekly is always going to be a resistance, right? You're always expecting a rejection at the weekly, but you started to go straight through it. Now you're getting that opportunity, comes right back down to that 8 EMA, and it touches right there at the weekly. From that level, we're gonna grab the same tool right there because you want to enter right on the weekly, a 0.10% stop loss right there, going up to those highs, a little bit lower, 2.8. It's still a great trade, not as good as if you would have gotten down here. However, great opportunity, great value there to where you're going. And again, this is a conservative profit taking level. And it just continues on and on. I'll give you one more example to the downside. Now again, I want to highlight what I mean by the continuation. I keep saying you want to see 2 candles. What do I mean? So right here, you saw 1 candle below, second candle here. And look, you technically would have had a level for an entry here. But one thing that I want to highlight is if you're entering right there at the ADMA, even with a 0.10, again, you want to use the same type of levels every time to see what the value of that trade is worth. You have to start aiming for those resistances because you're expecting that weekly to be a level. You have to know where those price action levels are. You can't just mark arbitrary levels. And you can see if you're coming down to that resistance, which is that weekly level, you're profit range is a lot less. It's a 1.37. This is just not that great of a trade based on everything, because your stop loss, you always want to keep it about the same on every trade to make sure you're using the same statistics going forward. So that's the opportunity level you're getting here. Now, if we come back over here, let's see what's going on. So you can see you start to break down once again here. You come down, you break right below, but guess what? You come back up, you retest, and guess what it gives us? The retest of the ADMA, also testing the weekly level. Once again, same level. We're gonna use that same tool right from that entry range right there. 0.10%, come right back down. And look how much downside you ended up having on this one. More and more and more. Just continues and continues. And if you wanted to be safe, you could have moved that to your last previous lows, and it's still a 3.36 profit range on that trade. Again, this just goes on and is going to get the best possible entries and give you more confirmation and confidence going into each trade. Now, in closing, I want to just wrap up my viewpoint of the ADMA, what you should be looking at, and how to tread carefully. You want to use the ADMA combined with price action, with the weekly levels, the monthly, whatever you may want to use it with. Finding those key zones, that's more advanced. We'll get into that later. But for now, using it in tangent with those weekly, daily, and monthly levels. That's going to be your friend. 2, you want to follow that trend. You saw we had more success to the upside than we did to the downside. Just statistically speaking, there was more opportunities to trade to the upside because you were in a bullish trend above that monthly level. Number 3, follow your rules. Don't adjust those stops. Keep them the same, so all your trades end the same. And what I'm saying is, if you're having key rules set in place, you know exactly how many trades you need to win versus how many you need to lose. And losing is a part of it. You are going to lose. I will hammer this home in every video. If you stick to your plan and you don't start swinging for the fences on every single trade and you stay to your playbook, you can afford to make losses. But you want to have a strategy that's going to keep you in that profitable range, 1, but also allows you to lose occasionally as long as you're sticking to your rules. So you don't want to start adjusting those stop losses all the way to 0.5. You actually want to bring those stop losses down as you get into profit so you can continue to make money on each trade. So stick to those rules, and I guarantee you will not regret using the strategy in your next trading session. And before you leave, I would appreciate if you hit that like and subscribe button down below. It helps out the channel tremendously. More content is coming specifically about trading, price action, and getting your feet wet in day trading options and stocks every single day. Have a good one.